I made profit, I ensured my profit was there, and I gave all of you stake, and I'm ensuring I'm keeping 70% and I'm not diluting it. But if I'd given 100% dividend out, then I'm being little greedy. If I'm paying 100% dividend, I'm little greedy. But the question what some people are asking, is there tax on this? Yes, you have to pay tax on this. I have to pay tax on this. But how does it matter? I'm taking salary on top also, expense, and I'm taking one bonus at the end of the year for working hard. Okay? But do you think I will actually pay tax? The real question. Do you think I'll actually pay tax? No. Let me ask you one question. Do you want to know how much Mukesh Ambani took as dividends last year? Do you want to know how much Mukesh Ambani took as dividend? Let's learn from real examples, right? This is an Excel sheet. Let's go back and learn from real examples. Okay, let me come back. Now comes the fun part. Okay, look at the dividend payout ratio here. Okay, now let us first look at Reliance dividend analysis. What is the net profit of dividend? 79,000 is the net profit of March 2024 of Reliance Industries. 79,000 crores. Okay. And how much is the dividend payout ratio? Dividend payout ratio, because now you guys all know, it says 10%. So if I had to go back to a calculator over here, 79,000 crores into 10%, sorry, 79,000 crores into 10% is how much? 7,900 crores is the dividend overall paid for everybody. Understood? Overall paid. I am not saying this. Reliance only said this. See this. 79,000 crores yearly revenue and 10% they gave out. 90% of Reliance money went back into Reliance to grow the business. That's a good sign. And if you see, Mukesh Ambani in the last 10 years has always stuck to 10%. 10, 9, 9, 9, 10, 10, 10, 11, 10, 12, 12. See? That means Mukesh is saying, boss, I'm very clear. Most of the money is going back into my bank account. Okay? But now the question that you asked me, you have to ask the same question. Shashank, how much does Mukesh Ambani own? How much does Mukesh Ambani own? Correct? Yes or no? We agree to that? Chalo, let's see. So, this is the shareholding breakup of Reliance Industries. And the promoters of Reliance own 50% of Reliance. And they've held 50% from a long time. How much is 50% of 7,900 crores? 3,950 crores was what Mukesh Ambani and Parivar, all the promoters of Reliance, took home last year. All the people who were here talking about, Arey, Mukesh Ambani spent 70 crores on Rihanna to come and sing. He spent so much crores in Jamnagar to do that. What is 70 crores and what is 3,950 crores? Do you understand the difference now? And by the way, this was only last year. What do you think he took before that? Another 10%, another 10%, another 10%, and 50% off that. So can I say Mota Bhai has made good money? Mota Bhai has made good money. Do you know that 3,900 crores is basically $500 million that goes into his bank account every year? $500 million. And this is not including his share price going up. His share price is still going up. This is bonus. Superb. Wonderful. But it doesn't end here. Boss, it doesn't end here. Let me teach you more. Okay? After promoter, you will see another thing called FIIs. Do you know what FIIs are? Do you know what FIIs are? FIIs are called foreign institutional investors. Basically, these are investors who are investing from outside of India, not from India, outside, dollars, They might be growth funds from Europe. As you see, there's a Euro-Pacific growth fund. Government of Singapore has 1.5% in Reliance. There might be so many hedge funds from US investing in Reliance, right? Now, let's assume how much did Mukesh Ambani make for these guys in dividends. So the total FII holding is 22%. So now if I go back here and do 7,900 into 22%, Mukesh Ambani made 1,738 crores bonus for all the people who have invested in him from outside of India. You've seen this news. Dubai is investing heavily into Adani. Dubai is investing, Abu Dhabi is investing into Reliance. All this money goes back to them, out of the country. Basically, the rich have become richer. Do you agree now? Now you understand the game? Rich have become richer concept? Yeah? Okay. Till now we understood. What is the next thing? There is something called DIIs. Do you know what the full form of DIIs are? They are called domestic institutional investors. These are our guys, apna log. These are Indians. Okay, these are your SBI mutual funds, your HDFC mutual funds, your Axis mutual funds, your LIC mutual funds. But who puts money into the mutual funds? By the way, who puts money into the mutual funds? We only put money into the mutual funds. So they take our money and put it back into Reliance. Yeah? So they invest like that. They invest it for us. Fine. No problem. Because this is money inside India. Money is coming back to India. So how much did Mukesh Ambani make for all the mutual funds in India? Another 17%. Okay? So 7,900 into 17% is 1,343 crores made for all the mutual funds in India. Good or bad? Good or bad? That's awesome. That's awesome. Because this money makes the mutual funds value go up more. Okay, fine. Finally, we have something called public. Do you see public here right at the end? Do you know who public are? Public are people like me and you. Me and you. Okay? Buying Reliance shares directly. We hold only 10% of Reliance. Only 10%. So if I had to do dividend analysis, out of 7,900 crores, only 10% came to Aam Aadmi, people like me and you directly in our pockets. Do you know when Reliance share falls down, who cries the most? Who cries the most when Reliance share falls down? People like me and you, guilty. We only cry the most. But you know that we hold the smallest amount of stake in Reliance. In fact, if Reliance falls down, Mukesh Ambani, FIIs and DIIs have to cry more because they own 90% of the business. We own only 10%, chindi amount, so small. But we cry the most. Do you agree to this? Now I came to the part of tax. Remember I spoke to you about tax? That does Mukesh Ambani pay tax on this? Is he mad to pay tax? Do rich people pay tax? No, they don't pay tax. What do? They take this money into a trust. You know what a trust is? They take money into a trust, holding companies, and then they divide the money. Okay? Very good information. Do you guys like this information? By the way, the website that has all this information, guys, the website that has all this information, I'll give it to you. It's called Screener. Let me give you this information. It's called Screener. It is a free website. Okay? Just go to this. It's a free website. Understood? Got it? Very interesting. Amazing. Now, let me show you our old example. Do you remember TCS? TCS, you remember? Yeah? Now, look at something that is very funny. Huh? I'll show you something that's very funny. TCS last year, look at last year's data, 2023 data. They had 42,000 crore net profit. And what is the dividend payout ratio last year? What was the dividend payout ratio? 100%. 100% is dividend payout ratio. That's too much, right? That means 42,000 crores of dividend. That's madness. Yeah? Correct? Agree or not? This is dividend, money going out of the company. Now let's understand who owns this. Who owns Tata Consultancy Services? How much percentage? That is your next question. Let's look at it. So the promoters last year, Tata Sons, by the way, Tata Sons Holding Company, they had 72% stake. Okay, 12% was owned by FIIs and 10% was owned by DIIs, and only 5% even today is owned by people like me and you. But that is not the question. The question is 72% of the previous amount, which is 42,000 crores. Let's understand what is that. 42,000 crores into 72%. 30,000 crores went back to Tata. Do you know why they did this? Does anyone know why they did this, or should I give you a nice story? A little off topic, but I can give you a nice story about this. You want to know why? Should I give you a nice story about this? Okay. Listen to this very carefully. Okay? Listen to this very carefully. Basically, what happened is, listen to this graph very carefully. Last year, Tata Consultancy Services, that was making a lot of money, gave 32,000 crores to Tata Holding Company. Now, Tata Sons Holding Company is a tax-free entity. It is called Tata Trust, Tata Sun Trust. Okay, it is a tax-free entity. So, complete 32,000 crores went back to Tata Holding Company. Now, what did Tata do with this 32,000 crores? What they said is, guys, TCS is making so much money. We're taking 32,000 crores into our bank account and we are going to redistribute it to all our businesses that need money. That means I'm going to give it to Taj Hotels. I'm going to give money to Tata Motors. I'm going to give money to Tata Power. I'm going to give money to Tata Consumer. And I'm going to give money to Trent. But why did they do this? So that Taj Hotels can expand their business and grow more Taj Hotels. Tata Motors can make more electric vehicles and make money. Tata Power can start more charging stations. Tata Consumer Products can open more Starbucks. And Trent can open more Zudio stores. But if Tata did not do this, then all of these guys would have to go to the bank, take money from the bank and pay 13-14% interest. So by Tata taking money from one of their own companies, tax-free, and giving it to all their smaller companies, that was a master stroke. And because of that, last year, IHCL, Tata Motors, Tata Power, Tata Consumer and Zudio Trent have all gone up by 40-50%. All the shares have gone up. Why? Because suddenly they got extra money that they did not pay any interest for. In fact, some of them like Tata Motors paid their loan early also and closed some loans so that the interest is not there. Isn't that amazing? How's the story? Good or bad? By the way, this is real life. It's not story. It's actually really what happened. But that is why Tata was doing so well because of this. Crazy? New information you're learning today? Nice new information you learned today? Yeah? Okay. Cool. Let's do one thing. Okay? Profit and loss statement, you guys are experts now, so I don't need to say anything. Balance sheet, dividend payout ratio, all of you guys know. Awesome, congrats. Can we now go to balance sheet? Can we now go to balance sheet? Yeah? Can we go to balance sheet? Let's learn because you need to learn everything, right? Okay, let's come to balance sheet now. Now, in balance sheet, listen to me very carefully. We'll finish balance sheet and we'll take a small 2-minute break. Is that okay? We'll finish balance sheet and take a small 2-minute break. But I'm sure you're enjoying now, right? You're enjoying till now because it's crazy information. Right? And it's so easy for you to digest. Okay, what is balance sheet? In balance sheet, we need to learn only two things. Two important things we have to learn, guys. What is the two important things? One is reserves. How much money is in the company bank account? And the second is borrowings or loan. How much loan I have in my bank account. Now, what is the amount I told you last year that I have in my balance sheet? How much money am I saving last year? How much money did I put back into my company bank account? Very good, 11.25 crores, right? 11.25 crores is the amount of money I put last time back into my bank account. Wonderful. And how much loan did I have last year, guys? How much loan did I have last year? Completely zero. Very good. Now, what I'm going to do is, let's come to year 2. I'm telling you guys that, guys, in year 2, I have 150 crores of sales. Is it good or bad? Year 2, I have grown my sales by 50%. Is it good or bad, guys? Yeah, all the smart people now have become smarter. They're saying, boss, first tell us what the expense is. Good one. Good catch. Very good catch. Okay. Okay. I'm going to say that my expense is 105 crores. Okay. I'm going to say my expense is 105. That means my operating profit becomes 150 minus 105, 45 crores. And my operating profit margin is 45 divided by 30%. Till now, okay? Till now, okay? We're all agreeing to this? Wonderful? Okay. Now I'm going to tell you guys something. So guys, listen. Last year, the reason why I grew from 100 to 150 crores is because at the end of last year, I thought I should take a loan. Okay? I thought I should take a loan to make a new manufacturing plant in the market. Now, I took a loan of 50 crores. Let me come back to my balance sheet. And I'm saying this year I took a loan of 50 crores. Okay? And the bank gave me an interest rate of, let's say, 15% to make it easy. So basically, every year I have to pay 7.5 crores of interest. Only interest is 7.5 crores. Okay? So what is my interest now? 7.5. Yes. So what is my profit before tax? 45 minus 7.5. And on this, I have to pay 25% tax. Okay, 9.4. So I'm just going to do minus minus. Basically, it comes to 28 crores. Okay, 28 crores is my net profit. Is this good or bad now compared to last year to this year? Last year to this year, it is good. No problem at all. Okay. Now I'm going to say the same thing. I'm going to keep 50% in my company bank account and my dividend payout ratio is going to be 50% again. Cool? Correct? The tax I've paid 25% only, guys. Tax is 25% of 37.5. Okay. So what is the amount that is going back into my company bank account? Out of 28 crores, half of it is 14 crores. Okay. So 14 crores plus what did I have last year? 11 crores. So basically I have 25 crores in my bank account and I have 50 crores worth of loan. Okay. This is the understanding of our company today in year 2. 25 crores is my reserves, which is my money in the bank account, and 50 crores is my loan. Agreed till here? Now, what happens? Listen to me very carefully. What happens if tomorrow the government of India comes and says, Shashank, you cannot make this glass bottle anymore. It is not allowed. We are moving to only aluminum bottles. What happens to my company? I have made a new manufacturing plant to make a glass manufacturing company. Now, what will happen to my company? First thing is first, I have just taken money from SBI. Let's assume this is SBI. I took 50 crores from SBI to set up a new manufacturing plant. Maybe this happened. Maybe recession happened. Maybe tomorrow I could not build the plant fast enough, right? Now, can I go to SBI bank and be like, bro, SBI, listen to me. I can't pay this year because, government of India banned my glass bottles. So can you tell me that I cannot pay loan anymore? Do you think SBI will be like, Shashank, you're our friend only, don't pay. When money comes, you pay us. Will SBI do that to me? Will SBI come and tell me, don't pay loan? Chalo, maaf, we'll do it later. No, right? He's not my father or brother or grandfather's company. SBI is not there, right? So what will SBI say? Now I have two options. I'm like, shit, SBI is saying, please give me the money. I have two options. First is the easy option. What is the easy option? Take a flight, first class, business class flight to UK and run away and stay there and only tweet on holidays of SBI. That is the first option. Very easy to do that. Kal I will take a flight and go, nobody will know. I am already in UK and I am texting on SBI holidays, Happy Ugadi. That is my first option. But I am not that. I am a good citizen of India because I love paying taxes, right? So now what I can do, I will be like, okay, let me think about this. So I'll be like, SBI, come here. Listen to me. 25 crores I have in my bank account. You take it. Full money what I have, you take it and go. SBI is like, okay, we will take your full money. But another 25 crores, what will you do? You still don't have 25 crores. We're still stuck. So then SBI will be like, this new manufacturing plant you bought, right? You just bought a new manufacturing plant. We are locking it up. We are seizing that new one and we will liquidate and take that 25 crores as well. And we will lock down your facility. If they lock down my facility, what will happen? My reserves have gone to zero. My loans have gone to zero. And my revenue from 150 will come down to 75. And I am finished. Yes or no? Stock will go down. Now, why did all of this happen? Why did all of this happen? Did this happen because I was being little aggressive in life? Did this happen because I was being little aggressive in life by taking a 50 crore loan? Do you believe that? What if I had not taken a 50 crore loan? And let's assume, what if I had taken only a 25 crore loan? And I had 25 crores here. Would this be okay? Would this be still okay? It's not great, but it's okay because my existing manufacturing plant will not go down. I can make revenues and grow back. Okay, instead of 25 crores, what if I had just taken 15 crores? What if I had taken 15 crores? I'm completely fine. No problem at all. Right? So very good. You have just learned a new formula called debt to equity ratio. It is also known as a solvency ratio. Debt to equity ratio basically says, what is Shashank's debt to his equity? So what is my debt? 50. What is my equity or my money? 25. So if I check my debt to equity ratio, it comes to 2. Anything above 1 is considered bad. Anything above 1 is considered bad. Anything above 1 means I have to refinance that loan, I have to sell my plant machinery, and it becomes a big problem for my life. We all understood this now? So if my debt was 25 crores, I'm okay. And if it was 15 crores, I am much, much better, peaceful in life. And even the shareholders, which are you guys, will be peaceful. Yes? Or else I will run off to UK and make my money and you will be like, Shashank, my shares are stuck. What did you do? Why did you do this? Do you all agree to this statement? Yes or no? Correct? So debt to equity ratio needs to be less than 1. Okay? Now that was what your new learning was in the balance sheet. Now let's understand with examples. As I said, we should always do examples, right? I'm just doing examples now. This is the balance sheet of TCS. What is TCS's reserves? TCS's reserves is 90,000 crores. What is the borrowings of TCS? 8,000 crores. Is that good or bad? Is that good or bad? Nothing. That is amazing. There's no loan only. 8,000 crores. TCS is throw it on the bank and say, get lost. Don't talk to me right now. Okay? Okay. Let's understand another company. Look at Adani Enterprises. Now, there is a shortcut to do this, by the way. There is a shortcut to do this. You don't have to keep going to the reserves and borrowings. When I told you go to Screener and check Screener, you can go to Screener and there is something called add ratio on table. You can see this, right? Go to that add ratio on table and just type debt to equity. It will show up for you completely free. Now, automatically, when I click on Adani Enterprises, you will see debt to equity ratio is 1.67. Is this good or bad? 1.67. Bad? 100% bad. Okay, let me give you another example. What about Mahindra and Mahindra? 1.61. Bad. Look at Tata Motors balance sheet. Tata Motors balance sheet. One second. Where did it go? Yeah, Tata Motors balance sheet. 84,000 reserves and 1,07,000 borrowings. Almost 1:1. Almost 1:1. But I want you to observe something. Can you go to last year, March 2023, see the reserves and borrowings. 44,000 crores reserves and 1,34,000 crore borrowing last year. Boss, that is madness. That is madness. It was 3 times debt to equity ratio. Remember when I told you one Tata story? Something happened. Tata gave money to Tata Motors. Immediately see the impact next year. The loan from 1,34,000 has gone down to 107, and the reserves of Tata Motors has gone from 44 to 84. Can you see that difference? Now you understood how money flows in the market. Now you understood how it went from 44 to 84 and loan went from 134 to 107. When Tata Technologies IPO came out, Tata Motors made 10,000 crores from that IPO because Tata Motors had stake in that company. It made 10,000 crores which it used to clear the loan. Wonderful? Wonderful? Now you know how real life examples are made. Now you know how real life examples are made. Amazing. Okay. Can we take a quick 30-second break before I go to the next exciting part, which is called valuations. Now, this is the most amazing part. See, now you have become an expert in profit and loss statement. You have become an expert in balance sheet. Now we are going to become an expert in the valuation metrics. And we are going to have fun. In the same way we will learn. Same way we will learn. Okay? Awesome. So I'll just have a sip of water and coffee and then we'll start. Just a 30-40 second break. Just have some water. But by the way, for all the people who are here, how are you enjoying it till now? How are you enjoying it till now? Are you enjoying it? Are you loving it? It's a very different way of learning. See, I can easily go and confuse the shit out of you and just show everything and be like, this is this ratio, this is that ratio. Nothing you will understand. The way I'm teaching you today, you need to learn it once and then you don't have to learn ever again. Okay, that is how basically I teach my students. I love teaching. That is why I'm very passionate about teaching and I teach a lot of my students very similar way, but I teach them more slightly advanced stuff also about what stocks to buy and what stocks are there and which sector is good, which sector is bad. All of that we do. But this is how you start. Okay. Okay. Let's go to the next one. Chalo. Now we go to valuation. Very interesting. Now, you remember this valuation when I said 70-30? You remember this valuation when I said 70-30? Bhavin is saying teach P ratio. Bhai, I'm coming to it. I'm not running away. I'm going to teach you everything, boss. Relax karo, Bhavin. You remember 70-30? Now let's assume, okay? Let's assume, let me remove all this. Let's assume that my company, which is Shashank Udappa company, I have not told you how much 70% of what and 30% of what. I just said 70-30. I didn't say 70% of what. So can I assume for example purpose that this Shashank Udappa water bottle company, this one, okay, has a total of 10 crore shares? Can I assume that? 10 crore shares? Yes or no? Just assuming, assumption. I have made it out of thin air. 10 crore shares, because easy for calculation. So how much do I own? 7 crores worth of shares and you own 3 crores worth of shares. Simple logic. Okay. Why am I showing you this? Because this is important. Okay. So the total shares of the company are 10 crores. Okay. Very good. So I'm coming here. What is the total shares of the company? 10 crores. Okay. How much profit did I make in the first year? How much net profit did I make in the first year? 22.5 crores. Okay. Now, my total shares are 10 crores. My total net profit was 22.5 crores. If I ask you the question, how do I calculate what is the profit per share? What will I do? I want to calculate profit per share. So what will I do? I will do 22.5, which is my profit, and I will divide it by the total number of shares I have. Okay? When I did that, it comes to 22.5 or 2.25. Okay, I've rounded it off to 3, but it's 2.25. Correct? Did we understand this? How I got 2.25? Very simple, basic mathematics. Total shares 10 crores. My profit was 22.5 crores. So my question to you was, what is my profit per share? Nothing. Divide profit by total number of shares. Comes to 2.25. By the way, this 2.25 is nothing but EPS. Remember, somebody was asking me, Shashank, what is EPS? What is the full form of EPS? What is the full form of EPS? Earnings per share. Technically, earnings per share is nothing but profit per share. Okay, what is the formula for profit per share? It is total profit. Remove this. It is profit divided by total shares. That's all. It's basically total profit divided by total shares. That's it. Till now, did we understand 2.25? How we understood? EPS, we understood 2.25. We all agree? Okay. Now I want to ask you guys a question. Listen to me very carefully. Now all of you guys are shareholders of my company. Do we agree to that? All of you guys are shareholders of my company. 30% you guys own. And I am telling you that Shashank Udappa's company, which is this water bottle company, has made 2.25 profit per shareholder. Per share, whatever you own, I am making 2.25 rupees. Now I'm saying, guys, I want to sell some shares to you guys. I want to sell some of my shares to you guys. Will you guys buy it? Will you guys buy it? If I sell some shares, will you guys buy it? Okay. I am asking a share price of 100 rupees. Will you guys pay me 100 rupees to buy my share? Everyone saying no. Harshit, Sarthak, everyone saying no. Okay, only 1 or 2 guys are saying yes. Okay, so almost all saying no, because why will I pay you so much? Only it's 2.5 rupees you're making and you're saying buy it at 100. Okay, what about 50 rupees, guys? 25 times more I'm asking. Still some people are saying, no, it's still overvalued, and very few people are saying yes. Okay, mostly no. Okay, guys, what about 30 rupees? 10 times more. 10 times more. Okay, I'm saying half. Okay, half. Okay, chalo, let me be very clear. 2.3 rupees. 2.5 rupees, chalo. Are you guys saying yes or no? Everyone said yes. Guys, can I tell you something? Can I tell you something? Very smart, by the way. When I told you that I'm making 2.3 crores per year. By the way, next year also I made profit, right? Remember, I made 28 crores next year. So my next year's profit per share or EPS was 2.8 next year, right? But you all said that, Shashank, we will not pay you 100 because 2.25 we are not going to pay. No chance. I said, okay, fine, no problem. Then 50 you said no. 30, half people were ready, half people were saying no. And 2.5, everyone said yes. Do we agree? 2.25, everyone said yes. Clear? Now, when I asked you 100 rupees, how much is 100 rupees of 2.25? How much is 100 rupees of 2.25? 44 times? 44 times? Yes? Yes or no? I'm waiting for you guys to tell me whether it's yes or no. Okay? It's 44 times. So you don't want to give me 44 times. Okay, fine. When I asked you for 50, okay, 50 divided by this, 22 times you said no. Correct? You also said no for this. When I asked you for 10 times, you said no. And when I asked you for, let me make this shorter. Okay? When I asked you for one time, okay, when I asked you for one time, all of you guys said yes. Do we agree to this? All of you guys said when I asked you for one time. Do we agree to this? Yes or no? All are clear about this math? How I got this math? All of you guys are clear? Yeah? All of you guys are clear about this? Very good, guys. All of you guys just now learned what PE ratio is. This is P ratio. This was P ratio. Congratulations. This is P ratio. You want me to explain? You want me to explain how I got this? You already knew it, by the way. You already knew it. You already knew it. You just need little help in understanding, right? Okay, chalo, let me come back to it. This you understood how we got it. Let me make it completely like this. Okay? This you understood how we got it. P ratio, 44 times. So basically when I told you that guys pay me 44 times more than my EPS, you said no. When I told you pay me 22 times more than my EPS, you said no. When I told you pay me 30 times more than my EPS, you said no. And when I asked you one time more than my EPS, you said yes. Okay? What is P ratio's formula? Very interesting. P ratio is nothing but price divided by, which is nothing but price or share price, which is the price I asked you to buy my share, okay, divided by profit per share. That's it. Or EPS. That's it. This was the formula of P ratio for all the people who used to get confused with P ratio. What is PE? It is called price to earnings ratio. It is price to earnings ratio. As the name suggests, it's price to earnings ratio. So P ratio, why do people talk about P ratio so much? Because P ratio is a measure of understanding how many times am I paying more than the profit per share. Am I paying 44 times more? Am I paying 22 times more? Am I paying 13 times more? Or am I paying 1 time more? Understood? Crazy? Crazy? Now let's come to the ideal range of P ratio. Yes, very good question. What is a good P ratio? P ratio can be anything, right? But what is a good P ratio we need to understand. So ideally what you need to do is, let me show you. Okay? Look at Titan. Titan is trading at a P ratio of 86. Do you think it's overvalued or undervalued? Now, the best way to compare 86, there is something called industry PE ratio. Look at this, industry PE ratio. That means all the other gold players in the market are trading at 24 average and Titan is trading at 86. Now we agree that Titan is a great company. It is one of the biggest company. So if the industry average is 24, shouldn't Titan be maybe 27, 28 because it is a big company, little premium it can take, or chalo 30. But 86, isn't that a bit too much? 86 times earning. Yeah, debt to equity ratio is also high. Let me take you another example. Okay. What about Reliance Industries? Reliance Industries is trading at a stock PE of 28. Okay? Is that good or is that bad? 28, we don't know. We have to find out, right? Industry PE, we have to see. There is another easy way. There's a hack. Should I tell you a hack to find out whether a P ratio is good or bad? Should I give you the hack? Yeah? Go to Screener. Okay? Let me see if I can do this for you. Go to Screener. Okay? Over here, go to Reliance. Quickly go down here and you will see the stock price. Correct? This is the stock price. When you go to the stock price and you click on P ratio and you click on 5-year chart. Actually, you can even go to 10-year chart or you can go to max chart. Now, what this basically says, that in the last 20 years or whenever Reliance has been there since 2006 to 2024, every time the P ratio went to 30, Reliance fell down after that. It did it once in 2008, it did it once in 2020, and then it crashed after that. And now it's going back up. In fact, the median PE, look at this, median PE is 18.3. The median PE is 18.3. That means over a period of time, average Reliance shares has been at 18.3. So if I'm paying 30 rupees today, am I overpaying or underpaying right now? And this is not me giving you the P ratio. This is Reliance itself giving you a P ratio. I'm overpaying right now. And every time Reliance has gone below the median PE, can you believe after the 2008 crash, Reliance was trading at 12 PE. Blind buy. Close your eyes and buy. 2015 Reliance was trading at 12 PE. From 12 PE, it has gone up to 28 PE, and that is what you will see in the stock price. If I go to the stock price and do last 5 years or last max chart, you will see from 2015 how it's gone up from 500 rupees to 3,000 rupees. Crazy? Crazy or not? And if you see the industry PE here, if I do industry PE and click on it, it's 8.18 and this guy is sitting at 28. Whew. Madness. So that not only gives you whether you're overpaying or underpaying, right? But P ratio also gives you, with the history of P ratio if you do, it also gives you an understanding of when to enter and when to exit a stock. Mainly when to enter. Whether I'm entering at an overpriced situation or an underpriced situation. Correct? Now, one more. Last part of today. Let's understand one more thing. What is the share price? What is my share price today? What did you guys give my share price today? You all said yes to one PE ratio. 1 PE ratio. So sad. 1 PE ratio. People are giving 20 times, 25 times, and you've given me 1. No premium for Shashank Udupi. Okay, fine. 2.25. Correct? Yes or no? This was the share price you all said yes to. Now, tomorrow, let's assume that Ratan Tata gives me a phone call. It's possible, guys. I mean, he can give me a phone call, right? Ratan Tata gave me a phone call and said, Shashank, I wanted to buy Bisleri. But Bisleri guy said, no, I believe you have a water bottle company. I want to buy your entire company. 100% of your company I want to buy. I said, wow, Ratan, that is great stuff, man. You can definitely buy my entire company. So Ratan Tata says, okay, what is the worth of your company? What is your company's valuation? So I'm like, see, I'll tell you. My share price is 2.25 crores. And then Ratan Tata says, okay, cool, 2.25 rupees. My share price is 2.25 rupees. Ratan Tata basically says, how many shares do you have that I have to buy? Oh, I said, okay, cool. So my total shares in the company, I have 10 crores. So Ratan says, oh, that means your valuation of your company, if I have to buy your whole company, I have to basically pay 2.25 rupees to your 10 crore shareholders, 10 crore shares that you have. So technically my entire company's valuation is 22.25 crores. Is that correct? So Ratan Tata, if he wants to buy my company today, it is going to be worth 22.5 crores. Simple. 22.5 crores is what Ratan Tata has to pay. That means he has to pay 2.25 rupees for all the 10 crore shareholders. 10 crore shares that are there. Out of that, 7 crores is mine, 3 crores is yours. So you get 2.25 into 3 crores. I get 2.25 into 7 crores. And this is the valuation. Now, do you know what this valuation is also called in the market? Do you know what this is called? Yeah? This is called market cap. or market capitalization, etc., etc. But let's keep it simple as market cap. Market cap is basically the valuation of a company. Okay, this determines whether a company is big or small. If somebody wants to buy my company, they have to pay 22.5 crores. Remember, if you guys had given me little more, if you had given me 100 rupees, 44 P ratio, then he would be paying a lot of money right now. Okay, but you guys only gave me 2.25 rupees. So because you guys gave me a lower valuation, my stock price, my entire valuation of the company is also low. Isn't that very sad, guys? Isn't that very sad? Yeah, that is life. But this is basically market capitalization. Okay, now can I explain something to you guys? Now we've understood all of this. You've become experts in profit and loss statement, balance sheet, valuation, dividends, P ratio, and market cap. Now, I want to ask you a question. Remember in the start of this masterclass, I told you that I will show you some companies. Now you have to tell me if it's good or bad. Can we start doing that? Can we start doing that? Now, is there a way? We all agree that TCS is a good company. Me and you agree that if I go back and I show you TCS's shareholder profit and loss statement, we all agree TCS is a good company because it went up, everything is going up, consistently growing from time to time. Yes. So if I find a company that has TCS DNA, can I find more companies that have TCS DNA? Right? Okay. So, but Shashank, there is one problem with this. What is the problem? The problem is there are almost 5,000, 6,000 companies in the stock market. How will you sit and find a good company? Is there a shortcut? Is there a hack? Answer is yes. Answer is yes. Okay. Come back to screener. Okay. Click on screens. And here go to click on new screen. Remember what all we learned. Okay. We learned that sales of a good company should be growing. Operating profit margin should be growing. Debt to equity ratio should be less than, you guys have to tell me, debt to equity ratio should be less than 1. So you know these rules and regulations, right? So what I've done for you to make your life easier in this Excel sheet, if you go down, I have automatically put the entire screener for you ready made to copy paste. Copy this, go to screener, click on screens, click on create new screens, and then paste it here and run this query. You will automatically get a lot of companies. Oh, one sec. What is this? Oh, I have to remove this. Sorry. Don't copy the screener part, obviously. Just do this. And suddenly, if I open this, see, you will get so many. You will get 249 companies. And it is going across 1, 2, 3, 4, 5 pages. Okay? But let's not do this. It will get complicated. Okay? Let's do one thing. I'll show you now examples of companies. You guys tell me if it's good or bad. I am not going to tell. You have to tell me good or bad. Okay? Are we ready? Are we ready to do the learning part? Now you guys know everything. Okay? Awesome. This is Maruti Suzuki. This is Maruti Suzuki. Is the P ratio overvalued or undervalued? Is the PE ratio overvalued or undervalued? Think properly. It is fine. It is fairly valued. That is either overvalued, undervalued, or fairly valued. Okay, it is fairly valued because industry P is also 30. What is the debt to equity ratio of this company? 0. 0 debt to equity ratio. That is great. But wait, we have to find what is the share price look like. Okay. So let's go to the share price. This is the 5-year share price. In the last 5 years, the stock price is growing or going down? Is it going up or going down? Going up? Okay. If the stock price is going up, that means the last 5 years revenue has to be going up. Yes or no? Let's look at the last 5 years revenue. 2019, okay? 86, 75, 70, 88. Ignore COVID year. 88, 117, 141. What about the profit? 7, 3, 5, 6, 5, 7, 11 and 18. Good or bad? Last 5 years, good or bad? Very good. What about EPS? EPS went from 187 to 429. Good or bad? Very good. Now, what about return ratios? This stock, if you had invested in this stock, over 10 years, last 10 years, it has given you an average return of 19%. Remember in the start of this session, we spoke about some percentage. What did we say was a good percentage? Anything above 15, 16 is good. This company, which is Maruti Suzuki, which is one of India's largest auto players, is giving you 19% CAGR. That's mad. So is this a good company or bad company? Is this a good company or bad company? Good. We all agree. Your confidence now has gone up a little bit. You know where to look at. You know what to analyze. Yes? Your confidence has gone up? Okay, wonderful. Let me give you example number 2. Pi Industries. Okay? What is the industry PE versus stock PE? Is it overvalued or undervalued? It's good. I like it. It's fair. Okay? What is the debt to equity ratio? Very good. No debt. 0.02. Beautiful. Let's go check. Last 5 years stock price. Good or bad? Very good. Okay. What is the last 5 years profit and loss statement? Okay. 2019 se let's check. 283345536476. Every year growth. Okay. 496, 580, 720, 1000, 1100, 1500, 2000. Okay. 410, 457, 738, 844, 121, 1230, 1682. EPS went from 33 to 110. Okay, what is the return ratio say? The return ratio in the last 10 years is 27%. Last 5 years is 26%. This is over time one of the biggest compounders that you will see in life. Is that good or is that bad? Isn't this good? Crazy? If you go to Pi Industries on Screener and check its max chart, you will see the chart is up like this. Anywhere in life, if you are invested, you would have made money. Okay? Option number 3. Okay? Fast we'll do now. Now you're a little smart. Can we go a little faster? Okay. What is the P ratio? Overvalued or undervalued? Overvalued. Okay? What is the debt to equity ratio? Not there. Okay, no problem. But industry P is overvalued. Look at the last 5 years stock price. Oof. Little weird. Last 5 years stock price is not great. Not great. That means the revenue is weird. Okay, let's look at the revenue last 5 years. Look at this. 4751 49 587186. Profit 864 1000 938 1. That means it's too fluctuating. Up and down, up and down, up and down. Yeah. So can I say this is risky? Slightly risky? Because this is an IT company. All IT companies did very well in COVID. But this guy didn't do very well in COVID. Correct? So I can say this is risky. I'm just showing you how to analyze good companies from risky companies. Okay? Now, option number 4. Have you heard of Narayana Hrudayalaya company? The eyes company? Everyone's heard of Narayana Hrudayalaya? It's a hospital chain like Apollo Hospitals. Okay. Undervalued or overvalued? Undervalued. Debt to equity ratio? Completely fine. Okay. Let's look at stock price. Good or bad? Very good. Okay. Let's look at the profit and loss statement. 283125 COVID year. 374550. Okay. Very good. 434, 664, 987, 1152. Very good. What about the P ratio? 5, 16, 29, 38. Very good. What about the 5-year CAGR is 44%? This stock has given 44% compounded annual growth rate over the last 5 years. All the people who are saying 50% I want, 50% I want, this is giving 44%. And Narayana Hrudayalaya is a very big institution, by the way. It is not a small institution. We agree to that? They've been there for a very long time. Devi Shetty, his name is, the promoter. Quite a good guy, right? So there are companies like this that can do well. You have to just look at it. Okay? Have you heard of KIMS? I think all the people in Andhra Pradesh and all the people in Karnataka knows KIMS. Okay? It's a hospital, college also, and they have hospital. They have both. They have college and they have hospital. Okay? What is the P ratio? Slightly overvalued, 48 to 41. Chalo, little here and there. Okay, guys, little over there is fine. It is not like Titan is called overvalued. This is okay. I would say yes, okay. Debt to equity ratio, okay, fine, no problem. Let's go down. Look at the stock price. It has definitely gone from 1,000 rupees to 1,800 in the last 3 years. This is a 3-year chart because it just came out of IPO recently. Okay, let's look at the sales. Let's look at the sales from 2016. 512, 567, 664, 918, 1123, 1316, 2124. From 2016, they're growing. 109, 18, 71, bad. Suddenly big. Okay, fine. Last 5 years only we'll look at. 115, 205, 344, 366, 336. Little drop over here. Yeah. You see why the drop happened even though the revenue went up. Some other income from 27.52 became 13. And that is why you see EPS has dropped. And that is why you see this company is not a great company. I would say it's okay. Risk is higher. Yes. Okay, let's look at one more company. Are you guys learning now? See, I'm giving you real life examples. I hope you guys are learning. Yeah. Chalo. Stock P is slightly overvalued, 30 to 37. Okay. Debt to equity is 0.45. Fine. Stock price, oh la la. From 100 to 700. Oh, 7 times in 5 years. Okay, let's understand more. Okay, last 5 years. 19 COVID, 233139. 518 694 839. EPS has gone from 1 to 18. Okay, and if you look at the return ratio, even in the last 10 years, it has given 37% return. Now, to give you more information about what does Ramkrishna Forgings do, Ramkrishna Forgings are basically companies that make nuts and bolts and different type of casting elements for railway companies and automobile companies. Okay, that is what they do. For all railway and automobile companies, they make all the spare parts. Okay. Now, finally, one more company, Kaplan Point Industries. What is the stock P? 21 and 28. Is it overvalued, undervalued, fairly valued? Tell fast. Undervalued. Okay. What is debt to equity? 0. Superb. Okay. Last 5 years growth, very good. In fact, it has been growing every year. Okay. Let's look at the revenue. Wow. Every year the revenue has been growing. Every single year. Look at this. 232, 60, 329, 395, 442. 117, 215, 251, 308, 377, 461. EPS went from 1 to 60 in the last 10 years. EPS has gone up 60 times or 30 times because it's almost 2 rupees. 30 times in the last 10 years EPS. What will happen to your... Woo? Tell me if this is good or bad now. Tell me if this is good or bad. How do I find this company? How did I find this company? This screener, boss, this screener. Take this screener, go here, put it here, and you will see all of these companies are here. Right? If I just filter by market cap, right, you will see the difference. You'll see so many companies. Now, can I say all these companies are good? See, Ramkrishna Forging is here. I've just picked some companies. Can I say all these companies are good? No, Kaplan Point is here. There might be some companies that are bad also, right? Okay, no problem. Let's come back. Okay, come back to the Excel sheet. Are you guys enjoying? How many of you all want this Excel sheet? Will this help you if I give you the Excel sheet at the end of the day? How many of you all want this Excel sheet? Okay, so I'll do one thing. Remind me at the end of the session. I will share this link of this Excel sheet with you guys, okay? Remind me at the end of the session. I will share the Excel sheet. Cool? Okay, 1 second. One more. This is called, now very important guys, the 5-5 approach. And you guys are very smart now. You guys can tell me the 5-5 approach. What is the first step that we need to look at when we're investing in a stock? Is the sector a good sector? Okay. What are some great sectors in India right now? Infrastructure sector, defense sector, EV sector, green energy sector, IT sector, all good. So if we invest in a company that is in a good sector, okay, won't that be considered good? Won't the stock have a higher chance of doing well, yes or no? But if you invest in a sector that is not trending, like your sugar sector, your textile sector, not moving at all, then what is the point? Correct? Next, what do we do after that? We find the stock and then we check the profit and loss statement. We check the revenue, we check the operating profit margin, we check net profit, we check EPS, and we check if the net profit is growing. Then we go to step 3 where we check reserves and borrowings. We know this, me and you know this. Step 4, we'll go check the promoter holding. Because if the promoter is constantly selling his stake, that means why will I buy? If the promoter only is going to sell his stake, I will not buy. It's a red flag. And step 5, sadly, we don't have time to cover this here, but it is about reports and annual reports. How to read investor presentation and how to read annual reports is step 5. Okay? But sadly, I can't cover that here, but I hope that's okay. Cool? Got it? Okay? Now, what are the 5 elimination strategies? When would I say that the company is bad? Okay? The company is bad when you have uneven year-on-year growth. We saw that, right? The growth is going up and down. We don't like it. We saw that the debt is more than equity. Debt to equity ratio is bad. So that is not required. Then different tax rate. What if this year I pay 1% tax and next year I pay 40% tax? Would you like it? A lot of companies do this, by the way. They artificially hype up the tax to make it look good. Okay, so that is again really bad. Step 4 is promoter holding going down, and step 5 again is sometimes you have invested in a bad sector, or sometimes the CRISIL rating mismatch is also there. Okay, so these are the different problems that are there. Cool? Do you want to take a quick screenshot of this? Take it off right now. It's okay. If you want to take a quick screenshot, this will help you a lot. Okay, I'm not sharing the presentation because that's not allowed. But if you want to take a quick screenshot, you can. Okay, done. What is CRISIL? CRISIL is like, all of you have this credit score, Do you guys know credit score? All of you guys know credit score? You have credit cards, you have loan, you have your personal credit score. Similarly, all of the companies have their own credit score. All of their companies have their own credit score, and that is called CRISIL rating. Like how I have credit score of 450, 500, 600, 700. CRISIL rating is a rating given to the companies on how well they're managing their loan. Okay, guys, this is the previous slide, by the way. For all the people who want to take this is the previous slide. Okay? Fast, I need to move ahead. Okay. By the way, the Excel sheet I will give you that has the screener, you don't need all of this. You are already smart now. Don't depend on this. You guys are very smart. Yeah? Cool? Awesome. Now, coming to entry and exit rule. All of us have questions on this? All of us have questions on entry exit rule? Guys, any questions you have later on, we'll take it at the end of the session. I will answer all the questions. Don't worry about it. Now, entry rule we all understood. What do? We go to a stock. We click on the P ratio and check the past P ratio and see if we're investing at an overvalued position or an undervalued position. Right? We agree to this, me and you? Completely agree to this? Right? But now when do we exit? Right? Should I just stay invested forever or should I exit at some point? Okay? So I'll tell you what I do. You guys can see the screen, right? Yeah, you can see it screen. I'll tell you what I do. Let's say I invested in a multi-bagger stock. Let's say I invested in a company and that's given me 44, 45, let's say 50% it went up in 1 year. Now, do I get overexcited that it went up by 50% and just relax? Because there's a high chance that it can go down again. Agreed? Do you agree to me? So what I do is, every time my stock price goes up to around 40, 50%, I remove 20% of my holdings from that stock. You understood? Every time it goes up by 40, 50%, I remove 20% from that stock. Okay? Now, why do I do this? Now, that is my rule. My rule is 50-20. I wait for the stock to go. If I've invested only 1 lakh rupees in that stock, I wait for it to go from 1 lakh to 1 lakh 50. Once it goes to 1 lakh 50, I remove 20% from 1 lakh 50. How much will that become, guys? If I remove 20% from 1 lakh 50, how much money have I removed? Tell me in the chat. 30,000 rupees. Okay, so I remove that 30,000 rupees. But now what do I do with that 30,000 rupees? Do I go drink, party, have fun, enjoy life? No. I take that money and reinvest it in my other companies. So whenever why do I do this? Am I mad? I should just leave it, right, if it's going up. The reason why I do this, I'll tell you. Let's assume there are 2 people. There is Shashank and there is, let's say, Rahul. Okay? Both of us invested in the same share. Both of us invested 1 lakh and both of our share went up by 50%. Both of us are sitting at 1.5 lakhs. Now let's assume that Shashank removed 30,000 from that share. Right? Shashank removed 30,000 out, but Rahul did not remove anything. Now what if the share price falls tomorrow by 20%? Suddenly from 1,50,000, it fell by 20%. Okay? When it fell by 20%, how much did it fall? It came back to 1.2 lakhs. By 30,000 it falls, it came back to 1.2 lakhs. Right? But now tell me, how much had Rahul invested? How much had Rahul invested? 1 lakh. How much is his current holding now after the fall? 1.2 lakhs. That means his profit is 20,000. Now let's assume Shashank Gudappa. I have already removed 30,000. Now even if the stock price falls by 20%, my actual investment in this company is only 70,000 rupees. 1 lakh I had invested, 30,000 I removed. So now I can relax, chill out, I'll let it fall, let it go down. I have no problem. But Rahul will panic. Rahul will be like, oh my God, it's falling down, my profit will go away, I need to sell right now. But Shashank will not panic. Shashank will stay invested because then the market will turn and will start going up. So the main thing about entry exit rule is, right, when the market is going up and when the stocks are going up, exit some amount. Now you don't have to do 50-20. You don't have to do 50-20. You know what you can do? You can do 25. Let's assume the stock goes up by 20%, you remove 5% out. Now, when do you stop removing this money? Once I remove my entire 1 lakh out, I will leave that stock. Because that is a free stock for me. That can compound and go up as much as it wants. Until I remove that investment amount out, I have tension. Once I have removed the investment amount, I will not touch it. Got it? Yes? Are we clear? Okay? Chalo. Let's go to the, this is the Titan PE ratio chart. I was just showing some, this I already showed you. Okay? Are you guys understanding me till now? Because after this, we are going into the most important section, which is the multi-bagger section, which is my favorite section. But till now, are you understanding? Are you guys enjoying it till now? Now you can relax. Now there's no brain heavy stuff. Now it is relax. Relax stuff. We'll find more companies. But are you guys excited now? We understood a lot. Yeah? Chalo, let's go to the next one. Finding multi-baggers. Now this is basically how rich people become rich, like really rich, right? And not many people know how to do this because everyone believes that you should go buy Reliance, you should go buy TCS, you should go buy Titan. You can't become insanely rich by buying what everyone is buying. You should go buy companies that nobody is looking at. Okay? But how do we find those companies? Let me explain that and give you some hacks there also. Okay? Chalo. First of all, let me do one thing. What do I want to do is, can I understand? Let me explain this one thing. Actually, let me see where that slide is. There's one slide I want to show you guys. Ignore this. I will come back to this. Yeah, this is the slide. Look at the financial statement of this company and tell me if it's good or bad. Income 698, 727, 800. Is it good or bad? Good or bad? 698, 727, 800. Good. It's growing. Income is growing. What about operating profit? 15, 18, 17. Oh, actually it's 16, 18, 17. Okay. Not great. Look at the net profit. 23, 13, 6. What the hell? It's horrible. Right? By the way, this is Titan's chart in 2003. This is the portfolio of Titan, profit and loss statement of Titan in 2003. And this is when Rakesh Jhunjhunwala invested. Right? Now, both of us will be like, Shashank, how the hell did he invest? Because the fundamentals look horrible. But pay attention. Do you see something called one-off expense, one-off provision against losses? Okay. You know what this was? Basically, the company in 2003 came and said that we are expanding into the European market. We are going abroad. We're going to make more money, more dollars. And we are expanding into European market. And to do that, we have to restructure our company's operations in Europe. So we're going to provision 10 crores, might be a loss. We're going to provision 10 crores for this. And at that point, the assets of Titan, if I bought Titan and sold it, it was worth 396 crores. Do you know what was the market capitalization of Titan at this point when Rakesh Jhunjhunwala bought it? Can somebody take a guess? How many crores was the market capitalization of Titan? Okay, valuation of Titan in 2003. Market capitalization, if I had to buy the company out, it was 200 crores. The share price in 2003 was 50 rupees and they had 4 crore shareholders. So 50 into 4 was 200 crores. You could literally buy Titan at 200 crores and sell it for parts and make 396 crores. And today Titan has given a return of 1592x in 20 years. Today it is trading at 3,50,000 crores approximately. From 200 crores, it has gone up to 3,50,000 crores in 20 years. You know how much money you would have made? It's unbelievable. Okay? But now the question is, how do we find these companies? That's the biggest question. How do we find these companies? Now, can I ask you one question? This though I showed you. But can I say that if there is a company that has the exact DNA of TCS, okay, and it is a small company, what do I mean by small company? The market valuation of this company should be between 1,000 and 10,000 crores. 1,000, 10,000 crores means very small company. It should be a company that is between 1,000 and 10,000 crores, but should have exact DNA of TCS. If that is the case, then the chance that this 1,000 crores can become 40,000 crores, 1 lakh crores tomorrow and can give me 100x returns. Is that correct? I'm not telling you that there is, but if that statement is correct, then if I can find even 3 or 4 stocks that are good in that range, can I say that there is a win-win for me? Every year profit growth, every year operating profit growth, every year EPS growth, debt to equity ratio less than 1. And every year if this grows, the stock price will grow every year. We have to give it time. We have to give it time. Give it 20 years. But in that 20 years, it will pay for your marriage, your house and everything else. Your kids' education, everything. Right? So let's do that. Let's do that. I have already made a ready-made screener for you in this Excel sheet. It's called the multi-bagger screener. Okay? Copy this. I have made it 7,000. Let me change it to 10,000. Okay? So I'm saying I want a company between 1,000 and 10,000 which has a P ratio less than 50, a debt to equity ratio less than 50, sales and operating profit growth about 10% and 12%. And there are 2 return ratios I've added. Don't need to learn what this is, but 2 return ratios of 15%. Just copy this, go to screener here again, go to feed, not feed, sorry, go to screener, go to create a new screen, screens, create a new screen, copy, paste, boom. 119 companies that could be a great company and all of them are below 50 PE. Why am I not choosing companies above 50 PE? Why am I not choosing companies above 50 PE? Chances are it might be overvalued. Yeah. So now let me show you some examples of companies that I've already found. Okay. Number 1, there's a company called Share India. Okay, look at this. It's a 6,000 crore company. Very small company. 6,000 crores is nothing. Do you agree? It's a small company, 6,000 crores. Okay. What is the P ratio? 14.3. What is the industry PE? 20. What is the debt to equity ratio? Nothing. Okay, wait. We don't know if it's nice to invest. We have to still look at profit and loss, right? We don't know if it's a good or bad company. This does not tell me anything about the company's profit and loss statement. Look at the share price in the last 5 years. Very interesting. Very small company. Okay. Look at the profit and loss statement in the last 8 years. Now tell me if it is good or bad. Look at this. Good growth? Yes or no? Okay. Operating profit growth? Yes or no? Superb. Net profit 6, 8, 15, 25, 41, 81, 202, 331, 426. Mad growth? Superb. Okay. Last 5 years, stock price CAGR was 85%. It almost doubled your money every year. Screw 40, 50%. It almost doubled your money every year. Last 3 years was 50% returns. Is this good or is this bad? Crazy? Crazy? And this company is only a 6,000 crore company. It is very small. It is not even a $1 billion company trading on the stock market. Okay, chalo, let me show you another example. There's a company called Beta Drugs. By the way, guys, none of these are buying or selling recommendations. I'm giving you examples, okay? This is a beta drug company. Look at the P ratio 31. Look at the industry P 33. Look at the debt to equity not there. Look at the 5-year stock price, great. And look at the result, okay? Profit and loss statement. 51, 66, 91, 116, 184, 227, 296. Very peaceful growth. It's not explosive. It's not 50% growth rate every year. Peacefully it's growing. 9, 12, 18, 25, 43, 53, 60, 7, 8, 9, 12, 25, 31, 36. Do I care about this? As long as it's going up, I'm okay. As long as it's going up, I'm okay. Aram se you go up, I'm happy. Okay? Let's look at the stock price CAGR. Last 5 years, 69% CAGR. Last 3 years, 54% CAGR. Last 1 year, 63% returns. It has beat Nifty by 3 times. Boom. Are you loving this or not? Are you loving this or not? And by the way, how big was this company? This company was a 1,100 crore company. This company is very, 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 very small even today. And 3 years ago, this company was a 300 crore company. It has already given 300% return in 3 years. And it is only 1,000 crores. It is 6 times smaller than Share India. But what is the rule? What is the rule? I will only stay invested in this company as long as this is correct. It should keep growing. The next year, if 296 becomes 230, what will I do according to my 5-5 rule? If 296 becomes 230, what will I do according to 5-5 rule? Exit. Thank you, boss. Dhanyavad. Namaste. Goodbye. I am not emotionally attached. But there are companies like this that are doing crazy returns. You just don't know where to find it. Okay? You want one more example? Let's see some good and bad both. Okay? Yeah. Full exit. Okay? 4,900 crore company. P ratio 26. Industry 36. Debt to equity 0.29. This is the last 5-year growth rate. Damn. 200 to 1,200 by the way. Okay? Look at the profit and loss statement. Profit and loss statement last, see this, so weird. 531, 553, 228, 282, 323, 224. Is this good or bad? Is this good or bad? Bad. I'm showing you both, by the way. I'm not only showing you good companies so that you understand what is good and what is bad. This is bad. I will not invest in this company. Even though this company has given return, I have no guarantee that tomorrow it will give me good return. Why? Because it is fluctuating a lot. I rather find companies that are doing well. Simple logic. Okay? Now, one more company. Some new company called Yatharth Hospital and Trauma Care. Again, 3,600 crore company. 31.41 PE. Debt to equity is fine. This is the stock price. Doesn't seem very attractive. But this is only 1 year stock price. Okay? This is not 5 year. 1 year stock price. Let's look at the profit and loss statement. Is this good or is this bad last 5 years? Actually, every year is good. Very good. And this just came out of the IPO last year. It just came out last year in an IPO. That means there is still a lot of scope. So as long as this is going up, I am okay. Yeah. It has just come out with IPO. So this is still fresh. Nobody's heard about this company yet. But risky, very risky company. 100%. Yeah. But if it works, so will I go and put my entire net worth into a company like this? I'm not stupid. But will I put small money into such companies? Small money. That is where the game is. You don't have to put your life savings in these companies. Okay? Understood? I think this is what we've done. This I'll skip for now. Okay? So any company that has see some rules I'll tell you. Market cap should be above 1,000. Sales of the company, if it's above 100 crores, I would say it's a good company. Why? Because 100 crores to reach is not an easy job, by the way. So if a company is reached 100 crores, it is a good company. And the important thing is company should be profitable. If you want to take a screenshot of this right now, the company should be profitable. Number 4, good group backing. What do I mean by good group backing? It is a part of Apollo Group, part of Murugappa Group, part of Tata Group, part of Max Group, something like that, right? It's a part of a big MNC. Then the chances of it doing well is higher. Why? Because it's run by excellent management. And it should also be in a sector that is future growth. I will not go buy sugar stocks or textile stocks. I will buy EV stocks, data center type stocks, though AI stocks, those type of things. Are we clear? If you can stick to this, and do you need to find 100 companies or do you need to find 3 good companies? 3 to 5 good companies and you are done for your life. Done for your life. Correct? Yes. How long do we hold this? Important question here. How long do we hold this? As long as the company is giving profit, as long as the profit of the company is growing every year, I will enter the company and stay invested in the company. As long as the profit is there. If the profit goes down, I will exit the company. If the stock price goes down, I will not exit the company. I will only exit when the finances go down. Got it? Understood? And guys, this is basically how I analyze the market every single week. Did you guys like this? I teach my students a lot about the stock market like this every single week. I talk about energy sector, power sector. I think there was one question that somebody wanted to know. How many of you all want to know how much money I have made in the last 1 year? I think that is something that most of you guys want to know, right? My PNL or verified PNL. Because there are some idiots in the market who have spoiled our names. Okay, very, very badly they've spoiled our names. I have to tell you this very honestly. I love teaching and I've been doing the YouTube from the last 3-4 years. And even on YouTube, I love teaching. You can go open any of my old episodes. You will see how I teach, right? I sit on YouTube for 40-45 minutes and teach as well. But I believe that, boss, you first make money and then teach people. Don't give gyan without making money. So I'll be honest and open with you guys. I'll show you my last year's PNL. I'll show you my PNL until May. Okay. Ayushi can share the link of this PNL in the chat section, but I'll show you until May. Okay. And the latest one she can share with you, as Ayushi has shared with you, so that you can all see it. I have made approximately 1.64 crores profit in the last 1 year. Okay. Where my equity profit is 25 and my FNO was 1.38. And my capital on this investment was approximately 2 crores. So on a 2 crore capital, I've made 1.64. So approximately my return is around 64% in the last 1 year. Being honest, it's not over and above. It's not crazy. Nifty gave 25% last year. I have made 65% last year. So I think I'm going well right now, going okay right now. But my job is to just beat Nifty and get 15 to 20%. I got 65 because market was doing well, right? So I'm also enjoying. But I wanted to be open with you guys and have an open conversation. So that is why I put the link of my verified PNL in the sheet. Okay. And you can test it. It's a ready link of Zerodha itself. So you can have a look at it. Okay. Cool. Did you guys enjoy it till now? Are you guys having fun? Are you guys having fun? Yes. So for all the people who are saying majority is in F&O, I don't do a lot of Nifty, Bank Nifty, F&O. I don't like it. What I do is I buy stocks in futures and I buy stocks in options. If I feel that the stock has to go up tomorrow, because I can analyze stocks very well. So if I feel that TCS will go up tomorrow, I don't go buy TCS share. I go buy TCS futures. What happens when I buy TCS futures is if TCS goes up by 5%, I make 30% because I'm taking 5x, 6x leverage. But similarly, if TCS falls by 5%, I lose 30%. So it is high risk, high reward. But obviously I am smart, so I know how to play it. But that is how I play it. Okay. Now, given the time that we saw till now, whatever you saw, did I do a good job? Yes or no? Till now, did I do a good job? Yes or no? Okay. Awesome. All the people who paid maybe 299 rupees or even lower to attend this masterclass, do you think the value that you got for this masterclass was easily more than 1 lakh? I think the number of stocks that I've shown you, and I think 299 though you have crossed long ago with the stocks that I've showed you. Again, it is not a buying or selling. Please don't do that. But at least now, for all of you guys who have invested in some stocks that you already have, I would strongly suggest go back to all your stocks and see whether you have these things that you have learned. Okay. If it is not growing company, exit the stock or else you will lose money. Okay. Even if it is in loss, remove it off is what I would say. Okay. Now, what is your favorite takeaway of today? What is the best thing you liked today? What is the best thing you liked? Multi-bagger, PPTs, solving with examples, screeners analysis, exit plan, research and buy. Beautiful. Stock entry exit. Wonderful. Chat N1, N2. Your PNL. Someone like my PNL. Fine. Great, guys. I'm telling you, I make more money on this. I love stock market. I take little thing out and keep it in my pocket. Yeah, I love the stock market. It's my bread and butter, as you say, right? If you had to rate this masterclass from 1 to 5 from what we've learned till now, how much would you rate it? 1 to 5. Wonderful. Okay, I think almost everyone's given 5 to 10. Super. Okay, there is a poll as well. So if anyone wants to see how much it is, you can actually do that. So wonderful. I'm seeing 5 being the highest, obviously. Common sense. Okay. Okay. Wonderful, guys. I'm telling you, this is basic. I know this is like, I'm not overhyping it or I'm not overdoing it. But when we learn like this, when I teach my students this way, boss, the amount of learnings we do is just unbelievable. Because my students have literally made more than, I'm not boasting or anything, I'm being really honest with you, but they've made more than 40-50% this year already because of the stocks we basically look at and learn, and we go deep into it. We don't look at surface level like this. I go into the investor presentation, I understand where the business is, I understand whether it's futuristic or not, I understand whether it's going up or down. All of that is there in that community. It's not a course, it's a community, but it's a very exclusive place where I have a few students I teach, only the people who really want to learn, only them I teach, not for everyone, right? Now, congratulations, guys. I want you guys to clap hands because now you guys are in the top 10% of financial education. Trust me, not many people know how to do this entire type of analysis. They don't know how to do profit and loss statement, balance sheet, valuation, and you guys have learned everything in the last 2 hours. Are you happy or not? Could you ever believe that in 2 hours you would learn so much? It's crazy, right? Now, one question I have for you guys. How many of you all want to reach the top 1%? 10%, most of people are there. They understood this, they understood how to find stocks. See, screeners is something I've given you. Not everyone has it, only my students have it. But that is individualistic. I have made it for myself, but I've given it to you guys as well. But how many of you all want to now go deeper? Want to understand how industries work? How macroeconomics works, how Nifty works, what is going to happen tomorrow? Is Nifty overvalued or undervalued? If tomorrow another country goes to war with another country, how does it impact my stocks? Which stocks to keep for AI, data center and all of that? How many of you all have the time, effort and that jigger, that josh to learn a little bit more? It's only about learning. And all I need to do is, you have to give me 1 hour, not 2 hours, 1 hour every week. If you are ready to give me 1 hour every week, I will ensure you reach the top 1%, and after that you will have money issues won't be a problem. Because you will know how to find good stocks and invest in good stocks. But it's only for people who have 1 hour in their life. Okay? So for all the people who want to join be in the top 1%, I'll tell you what. Most of the people in today, and look at this beautiful ChatGPT art, right? Amitabh Bachchan was at one point at a 90 crore debt, right? And that was horrible for them. Even Michael Jackson was at a 400,000 debt in 2009, because when you make money, it is not about making money. It is about growing your money and becoming rich and financially independent. That is what we are trying to learn today. And there is only one way to reach financial independence, and that is by learning finance. Sadly, they don't teach you in school or college. But do you think financial education and financial freedom is only stocks? It includes personal finance, stocks, mutual funds, insurance, real estate, credit card, taxation. All of this is financial freedom, not just stock market and trading. Do you agree to this? That we need to become a master of everything? Now, do you think it's easy to become a master of everything? Do you think it's easy to become a master of everything? No. But do you think it is easy to become a master if somebody helped you properly, like how I've taught you? Under each and every segment? Wonderful. Okay. So let me introduce you to something that is something that, I don't know if you guys know this, but let me introduce you to something called, okay, the 1% Club. Have you guys heard of 1% Club? How many of you have heard of 1% Club? Yeah? It is a club that was started by Sharan. Correct? Sharan, Finance with Sharan, kya fook kya hai, kind of a guy. Yeah? So he started 1% Club, and a lot of people were facing issues like this. A lot of people were facing issues where they came to us and said, Shashank, we want to learn personal finance, insurance, credit cards, but we can't find everything in one place. If I go to YouTube, I get confused and then I'll sit and look at some song of some Arijit Singh. It is not possible. Then they said, even after I look at all of this, they give us 50 tools to analyze, and I can't understand what tools to use. And can you help us with which tool is good and which tool is bad? The third thing that they told me is, Shashank, it is very boring to learn alone, right? And they told it to Sharan as well. It's very boring to learn alone. But what if you had a group of people who you could learn together with? What if you could have any doubt and somebody answered that doubt for you? Not even me. What if people came and answered the doubt for you? Would you like something like that? Right? And the fourth biggest problem that people were facing is because they didn't have time at all. Nobody had time to find out what is to do this, what to do that, nothing. So we said, let's make it simple. 1 hour of your time every week you give me, and I will ensure that you are one of the best finance person, especially in the stock market arena. Okay? Now there are two roads you can choose. One is the current road that you're on, where you are confused, you don't know what to do, you don't know which tools to implement, and you're walking down this path and you're saying, Shashank, you know what, I don't have time at all, I'm very busy, I'm a busy man, I work hard, I party hard, I'm not saving any money. And then after 6 years or after 5 years, you'll be like, shit, Shashank, I don't understand, I don't have money at all. Or you take the smarter goal, smarter path and say, Shashank, you know what, I can sacrifice partying for 1 hour, but I will give you this 1 hour every week. And you ensure that I go on a very good financial path, right? So how many of y'all want to come on this good financial path? I mean, it's obvious, I think everyone should, but how many of y'all have that time? My biggest concern is how many of y'all have that 1 hour time? If you tell me I don't have 1 hour, then there is a big problem. But 1 hour to educate yourself in a weekend, not even weekday, chalo, weekend. Saturday or Sunday, you give me 1 hour. No office also, no give me excuses. And I will give you recordings of the session if you miss it. Now, do you have any excuses? Even if you don't attend it live, you will have a recording and I will give it to you. Right? That's all it takes, 1 hour. And that, with that whole idea, Sharan created the 1% Club and I helped him with the stock market part. Sharan does the personal finance and I teach stock market. And immediately when we had this idea of ensuring affordable education for everybody, Nitin Kamath came and funded our entire company. Nikhil Kamath, sorry, not Nitin. I keep getting confused with the two. Nikhil Kamath came and funded the company. And not only that, he also opened the doors for us to access the Zerodha ecosystem. And I'll tell you more about that. Very interesting community, right? Now I'll tell you more about that. So welcome to the 1% Club, where you have tools like financial planning. You have a community app. You have offline events. And you have the stock market tool, the stock market school and the money school. You have every single thing. Now, let me explain more about this. As you can see, there is Sharan here with his cool glasses as well, right? But let me explain more, right? In this entire money school or the stock market school or this 1% Club, we call it, I also have courses and education around credit cards. How many of you all have this problem? Shashank, I don't know which credit card to choose. I don't know what credit score is. When do I pay? How do I get free flight tickets? What are the best credit cards for me? We have a credit card course because we believe strongly that you should not go into debt. After that, we have Sharan's personal finance mastery course, right? Actually, let me show you more with how the app looks like, okay? Little bit FOMO you'll get. Let me just show you this. And I'll give you a lot of tools, by the way. You see half my tabs are different tools in the market. Huh? All of this I'll give you later. Okay, so this is the web version of 1% Club. But you can also download it on the Google and Play Store once you get access, and you can get more deep dive information on this. Now, if you go to the Academy section, there is pre-recorded episodes. Okay, this is different from the live classes that I told you every 1 year. Every one hour in a week I will help you. That is different. This is something that is already available for everyone. Now, you want to go learn personal finance, you can click on this and you can start looking at all the different modules that are there. If you want to learn about stock market from basic, you can go and learn everything about IPOs, top tools, how to read financial statements, cash flows, financial ratio analysis, annual reports, and psychology of investing. There is credit cards as well, how to invest in credit cards, which is crazy. Basically, you want to become an expert in finance, not just stock market. We have everything covered for you. All of this is a part of the journey, okay? And there are also some very interesting tools. Remember, I told you there are some financial planning tools for you. Look at this. All of these tools are at your disposal. You can just open this tool and just go into this and you can literally track your entire portfolio here. That's it. We have built everything for our community where they can just put everything here and we will give you an entire analysis for you guys, right? So, I mean, see, it took us a lot of time to build this. That is why we got funded, or else it's not that easy, right, to build something like this. So when you learn personal finance, you will learn things like how to create a budget plan, how to position your framework on financial goals, all of that, right? If you're looking at creating a custom financial plan, you can use the tool like Master Financial Planner. You can protect your entire wealth and start growing it. You can also understand how to invest in mutual funds, how to allocate your SIPs right now, how to choose debt funds versus hybrid funds. Every single thing has been well thought of for you, including health insurance planning. If you guys don't understand insurance, don't worry about it. I'll show you something very crazy for people who don't have insurance. It is mind blowing, right? We have life insurance plan, health insurance plan, stock market by me, right? And 25 different financial planning tools, everything as a part of the 1%. As I told you, this is only for people who come in the 1% club. Okay, if you want to be in the 1%, this is what it takes, right? This is what you need to learn. And you get the mobile app, which I just showed you. And now you also get, basically, the community is also here. Now, what do I mean by community? Look at this now. See the magic here. If you go to the chat section, and I'm very active here, and you go to the stock market group here, okay? Look at this. This is a group where we talk about stock markets crazily every single day, right? Every single day we're talking about something or the other about stock markets, right? How would rate cut help IT companies? People are literally replying to it. What is up with the defense space, right? Bears are not giving up. What is happening in today's market? Why is it going up? Any opinions on RailTel? These are people. These are not me. These are random people in the stock market. We have around 7,500 students already. And for these guys, I do every single week one session. And where is those sessions? You go into the events tab, right? We have different sessions coming up. Every time we have sessions, we put it here. You can go to the previous session here and you can literally go, and all the sessions are recorded. It doesn't end here. I'll tell you why. Because what if I told you that if you join this community, you can also save 20,000 rupees annually easily just by joining the community? Would you be interested in knowing how? In the tool, we have a new section which we have launched exclusively for the students called the money section. And we've just named it money because, boss, it is money. Okay, now look at this. Over here, I can book a free call for any insurance needs I have. There is no charge to you guys. I can call them and say what I want. They will suggest unbiased good and bad insurances for me. They will only give me good insurances, actually, from both life insurance and health insurance. They give me options also. It's not like they will send me one, but unbiased approach. Apart from that, I can create FDs on the platform. I can make a will on my platform. And if I want loan, I can get any kind of loan I can apply for here, and I can get help regarding that. Apart from that, if you have, how many of you all wish you had someone who can help you with your finances? So we have something known as Ask Your Personal CFO. So basically you can go here and you can book the first exploratory call for free. By the way, it is SEBI RIA registered, right? So you can book one call where you can explore and they can teach you. And then after that, I think it's paid. But the first call is absolutely free, where you can tell them what you're going through, what you need help. And they will look at your entire portfolio and give you a nice plan around it. Right? How many of you actually need this? So this is something I know most of my students are using, which is they need help with their entire financial planning right now because they don't know what to do, right? So easy financial planning with a CFO only for the people who join the community. Apart from that, we believe in offline education. It's not just online. Community building online is keyboard warriors. But what if you could come and meet Sharan offline? You could meet me offline. You could meet Raj Shamani offline. You can meet all of us offline. Wouldn't that be great? Apart from that, we also get speakers like Sahil Bloom, Deepak Shenoy, Lakshmi Iyer, Akshat Srivastava on the platform to give you more education around all of this, right? So all of these things are all packed into this amazing, amazing, amazing community, right? Look at this. By the way, we got Tanmay Bhatt also last time who had come. Now, this is one very interesting section. How many of you all use Amazon, Flipkart, Uber, Ola, Myntra, Zomato, Blinkit in their usual life? All of us use it. Each and everyone uses it. If you use all of these tools and spend even 20 to 30,000 rupees a month on these tools, what if I told you that just by learning on our platform, you can save anywhere between 5 to 7.5% on all of these platforms, only exclusively for you guys, right? Why? What we have done is we have tied up with Amazon, Flipkart, Zomato and said, boss, we have a 1% club. We have so many students who are learning. and we will give all the students who are learning, we will give them some coins, and they can use those coins to receive gift vouchers and get it from Amazon, Swiggy, Zomato for 5% discount. Can you believe that? Only because we have the power of negotiating. We've said all our 1% club students should get 5% discount on Swiggy. So if I go and buy a 1,000 rupees voucher on Swiggy, they will give it to me at 5% lower. And it can go up to 7.5. In a year, if I spend around 4 lakhs, I'm automatically saving around 5%, which is 20,000 a year. Right? Crazy? Okay. Now, another very interesting thing. For all the people who joined today, there is one problem that some people have. What is that problem? Shashank, if you guys go and do the stock market course, and if you come and join my next session next weekend, don't you feel that you'll be a little left out? Suddenly it's advanced information, there might be a problem. So let me make it easy for all you guys. For all the people who joined today, above all of this, one more bonus, I will add all of you guys to a 21-day free bootcamp. 21-day free bootcamp. I will put you in WhatsApp groups and I will assign mentors to you who will give you daily market updates about the stock market, give you stock updates about companies, and will teach you about case studies of different companies. And any doubts, any questions you have about the stock market, they will answer your doubts. And this is going to be a WhatsApp group where you can ask any questions that you want so that you are ready to come up to the next step. Would you like something like that? It's called a 21-day bootcamp. Interesting, right? Very interesting. Okay? Now, how many of y'all are ready to take this jump? Before I go into the pricing, I want to understand how many of y'all are ready to get on this entire journey of learning and becoming into the top 1%. Every Saturday, every Sunday, I will come personally 1 hour and teach you, right? Apart from that, you can join different teachers who are also teaching credit card and all of that. You can join them as well. Now, if I had to put up pricing to all of this, obviously there is so many things we're doing, right, for getting into the top percent. If I had to put a price onto this for gold membership, don't worry, you don't have to do 85,000, but I'm putting a value to it. If I had to make the entire Financial Freedom University with credit card, with stock market, with finance, it would cost 30,000. With all the Excel sheets we've made, with the tools and calculators that we've got, is 25,000. So all of these are there, which are very, very interesting. And if I had to sum up everything, which is lifetime access to live stream sessions, it would come up to 85,000. But obviously, that is not on the goal of making it financially affordable for you all. So to make it financially affordable, let's make a discounted price. And I'm not one of those guys who will give you a discount of 5%, 10%, 25%. No. I'm going to give you guys a massive discount from 85,000 to 22,400, 22,499 for lifetime membership. This is not monthly, this is not yearly. This is one time buy and forget, and then get access to every single thing on this. How many of you are excited till now? How many of you are excited till now? When I say till now, you guys should understand something. How many of you are excited till now? Is the full story over? Is the full story over? When I say till now, the full story is not over. Okay. Have you guys seen Kaun Banega Crorepati? Have you guys seen Kaun Banega Crorepati? Yeah? Have you guys seen Fastest Finger First? So let's do one thing. I'm going to do a Fastest Finger First for you guys. And for the first few minutes, only for 15 minutes, I'm going to give you a massive discount code, a coupon code, which you should use. And only if you use that coupon code, you'll get a huge discount, and only for the first 15 minutes. And for the first 15 minutes, guys, get ready. Fastest Finger First. The amount is going to be 14,999 inclusive of GST lifetime access. All you need to do is put the code N7500. Okay. So I'll show you how to do it. You have to go to the link. Ayushi has pasted a link. You have to go to that link and choose N7500. Let me just show you this. Okay. So you open this here. Go to this page. Okay. You put your name. I'm going to put my name Shashank U. Okay. At gmail.com. Okay. I'm just going to do 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, Gmail is wrong. Do lifetime access because you need lifetime access. And you do N7500. Okay, N7500 and click on apply. Automatically you get a massive discount. Click on pay, and once you click on pay, You will also get EMI options available for your credit card and debit card. And if you have paid, please put it in the chat here so that my team can also go through it and understand that you have joined or not. Apart from this, for all the people, very good question that you asked. Apart from this, there is also something known as 7-day money back guarantee. Let me be honest with you guys. If you don't like it, if you feel that after 6 days, you don't like this course, you get a full refund within 7 days. Okay, as I said, we have more credibility. We want to keep that credibility. I don't want tomorrow to say that Shashank, you came, I paid money and I didn't like it and you didn't give my money back. No, all those excuses are not there anymore. You can take your money back and go literally in 7 days. I do not care. Is that okay? Now, is it fair enough? You can literally come, attend my sessions, do the orientation, get into my WhatsApp group, and then if you don't like it, you can ask for a refund and go back home. Do we agree? Now, for all the people who have bought, please put your name. Just say that I have bought so that I understand that you have bought. Okay? And the code is N7500 for all the people that are there. Click on N7500. Do we agree now? 1 second. Awesome. Getting page cannot be displayed. Okay. Welcome to the club, Aditi. Welcome to the club, Karun. Give me 1 second, guys. I'm just stopping screen share, but welcome to the club, guys. So for all the people who have bought, just put it here so my people can actually see it and they can start verifying it in the back end as well. Okay. Or else it will be very difficult for us to verify it in the back end. So please click on it. And the coupon code is N7500. Okay. N7500 is the coupon code. Give me 1 sec. Awesome. And you get lifetime access along with 14-day money back guarantee. Okay, so you 7-day money back guarantee, so you don't have to worry about anything. So even if something goes wrong and you don't like it for some reason, no issues at all. You can just take your money and go back. I have no problem. I'm just sharing the screen again. Slide show. Second, hand from current slide. Yeah. So you can also scan this QR code if you want like a shortcut. You can scan this QR code and use the thing N7500. This is only valid for 15 minutes, not more. So please be attentive about that. Okay. Awesome. So the 21-day bootcamp, yes, the 21-day bootcamp will also start. Ayushi will give you more information about when the orientation session is. Then you will be added into multiple WhatsApp groups and then you will go through all of that. Okay. So don't worry about it. For all the people who are already a part of the 1% club, don't worry at all. If you're already a part of 1% club, you already have benefits to all of this. So relax, chill out. You're already in the exclusive club. This is only for people who are not a part of the 1% club. Yes, Zaka, welcome to the club. What else? Yes. And by the way, if you have any problems with payment, right, the Ayushi will give you a email ID. You can just email to that email ID and they'll help you with it later on. So not issue. Apurva, welcome to the club. Rahul, welcome to the club. Ravi, welcome to the club. Jyotsna, welcome to the club. Is there anything for 1 year? No, guys. By the way, this is a lifetime access. This is not for 1 year. I don't want to keep taking money from you every year. It makes no sense. Right? This is for my time, Sharan's time, a lot of other individual creators' time as well, who are coming and teaching you every single week. I'm coming and doing every single week from the last 2 years. And I've shown you that, right? You can, by the way, once you join, you can go back and check all my recordings from the past. Each and every recording from the past you can check. So don't worry about that. Okay? Madhu, welcome to the club. John, welcome to the club. Romit, welcome to the club. Beautiful. So there are EMI options available. Your card has to be available on that EMI option and then it will work. Okay? So can old members join your weekly classes? Yes, all the members can join my weekly classes. I showed you where my weekly class is, right? You have to just go join the webinar. You get the access over there only. Under the events tab, you can go get all the access. Okay. Narayan, welcome to the club. Yes, I will also do one thing. Let me share that Excel sheet with you guys. Excel sheet, go. Let me do one thing. Let me share this Excel sheet with you guys. Okay. I'm giving you viewer only access. Okay. All you have to do is once you get viewer only access, go here and click on make a copy or else it won't work. Okay. Viewer only access I'm giving you. So just check it out. Balkrishna, welcome to the club. So all the people asking me, we have subscribed. What do we do next? You will get an email with all the information, guys. So don't worry about it. Okay. You will get an email with all the information. So relax. Okay, and if you don't like it in 7 days, you just reach out to my club and you can get every single thing refunded back to you. Don't worry about that. Is there any underlying fee to any access to premium courses? No. No underlying fee for anything. Only if you want to get a personal call with the CFO for the second or third time, then you have to pay for their services. But apart from that, there is nothing there. Money, welcome to the club. Lokesh, welcome to the club, right? So that is how it is. So we are trying to make a 1% club. So that is where you start becoming smarter and smarter and smarter. Okay? Wonderful. Vijay, welcome to the club. So if, for 1 second, I think already a lot of people have come. I think this is going to get disabled very soon. I'll do one thing, guys, for all the people who are getting worried. Is it okay if I also send this link to you over email for all the people who have attended today? Can I send you a link over email as well? Ayushi, just remind me. I will send this over email as well, okay? I'll give you this link. Yeah. Just send it over email to everyone so that they can look at it whenever they're free. Awesome. So guys, as I told you, this is a 22,000 course. It will get deactivated in 5 minutes. If with the coupon code, it is 14999. But if the coupon code gets deactivated, then it goes back to 22499. So for all the people who are having payment issues, you can reach out to my team on that support email and they will help you and they will block this coupon code for you. But after this, if you come back to me next week and say, Shashank, I want it at 14999, later on, it will be tough. Because the only way you can come into this exclusive club is only via the masterclass. If you go normally, you cannot join, right? Ayushi, if you can share that mail ID of support so that they can also reach out to you if there's any doubts, yeah? Wonderful. Beautiful. What else, guys? Yeah, see the reach out email, as Ayushi has said, is over there. So she will be telling you all of that. For all the people who have issues, don't worry, reach out to the support team. They will call you back and help you with whatever is required. Okay? What all courses will it cover? As I showed you, Sumit, it will cover personal finance, it will cover insurances, it will cover mutual fund, it will cover credit cards, it will cover a lot of things. And stock market is something that I am doing as well. And in the future, and it's also covering tax. And in the future, we're getting more and more courses. You don't have to pay for those new courses that come. So all the courses that get added as well, you don't have to pay for it. You automatically get added into that. And every week I am doing a session, right? For now, last month we did a session on green energy. Before that, we did a session on banking industry. Before that, we did a section on Tata Motors versus Mahindra. And all of these videos are there recorded already for you guys. So all the people who have joined today, instead of wasting 1 hour on Netflix, I would suggest go back and read from there. Okay? So also, guys, all the people who are having trouble accessing the Excel sheet, I will send that link on email as well. So don't worry. I think too many people have come onto this Excel sheet right now. So that is becoming a problem. But I would suggest don't worry about it. I will send it to you over email as well. So don't worry. I've got your back. I've got your back. Relax. Okay? Awesome. And all the people who have joined, welcome to the club, because now you guys will get superb access and Ayushi will brief you with the orientation sessions. You will have a nice orientation session where you will learn a lot about how to use the app, how to get additional information, every single thing you will learn. So don't worry about that. Okay. And I am also open to take some questions. So no issues there. Praveen, welcome to the club. Ahil, welcome to the club. Nice name, man. What else? And usually the sessions are on Saturdays or Sundays, one of those days. But I will inform you 3-4 days in advance when my session is going to be there. Okay? So don't worry about that. 3-4 days in advance only I will give you full feedback about the session. Awesome. Paruki, welcome to the club. You will get recording of all the live sessions I do. So don't worry about that. Kaushik, welcome to the club as well. Yes. Abdul, welcome to the club. Wonderful. Super. Okay, guys, apart from that, all the people, I think a lot of people have chosen this amazing part of coming into the 1% club to fix and sort their finances. So for all you guys, hats off to you guys. Do you have any other questions related to the stock market? I'm happy to take some questions right now about different things that you might need in the stock market. Yeah. Ragan, welcome to the club. Abhishek, you're here. What is that? What some questions I'm looking at it. Okay, so good question by somebody. One question on the stock market. Once the IPO is over, the regular trading that happens in the market, does that help the company financially? Yeah, because I'll tell you what, if the stock price goes up, right, the promoter might have 50%. So that means his net worth is growing by That net worth is also growing when the stock price goes up. Tomorrow, if he wants to take a loan, he can pledge his shares at the market value. So if the stock price becomes, let's say his market capitalization of the company becomes 50,000 crores, he can literally pledge 10% of his stake for 5,000 crores. So that is what people usually do. Yeah. What else? Do you take personal classes? No, man. I am for the community. I teach everybody together. No personal classes. Yeah. What else? How is the total number of shares decided? Palash, welcome. Good question. So usually what happens, the company decides the number of shares that they have. So if I start a company tomorrow, I can choose whether I have 1,000 shares, 1 lakh shares, 10 lakh shares. And after that, I can keep increasing the number of shares as well. Let's say I found a new co-founder. I want to give him 20,000 shares. I can do that as well, right? So both are completely all right. Any rule to decide on the quantity of shares to buy? Very good question. I would say it should not be more than 10% of your entire invested amount. If I'm investing 1 lakh, then each share that I have should not be more than 10,000. Whatever the quantity is, it should not be worth more than 10,000. The weightage of each stock in your portfolio should be 10%, not more. Yeah. Aniruddha, welcome to the club. Suresh, welcome to the club. Sumit, on board it. S, what a name. Okay. Arjun Ahil, welcome to the club. What sectors are futuristic sectors? Okay, very interesting. As I told you, green energy is very important. Electric vehicle, inevitable sector. We have to go there. That is very important. These two are like the prime sectors. Infrastructure is doing well right now. Defense is doing extremely well right now. And railway section is also doing really well right now. And I would also say that people in India are spending more. So consumption theme is also playing. What do I mean by consumption theme? These are companies like your IHCL, which is Indian Hotels, your Indigo Airlines has given a record result, right? So these things are also doing really, really well. Do you have classes on F&O now? As of now, we don't have, because I teach fundamental analysis, but we are onboarding a we're onboarding a technical analysis guy very soon. So he will be joining maybe in 2-3 months, he will be joining as well. By the way, another very interesting thing I forgot to tell you guys who are already a part of this 1% club. So very soon, because we have the SEBI RIA license, very soon, there is going to be something that we're launching called paid small cases, where I will be a fund manager and I will be able to manage all your money over time. And I will be responsible for any kind of growth that you need. So you don't have to sit and do all this research and all of that. My team and me will do it. And you have to just invest in your own app. You don't have to give any money to me. You invest in your Zero the app or Grow app. But I will tell you what to buy and I will tell you what to sell and all of that, right? But that is a later on feature. I think 3-4 months later, I will be starting paid small cases. But that will be extremely cheap for all you guys. Yeah? What else? Asit, welcome to the club. John Kiran, welcome to the club. I like your short form, which was JK. Okay. What else? Any other question, guys? I'm DV, it seems. Okay, nice. I'm SU. Even with the discounted price, is the money back available? Yes. Yes. Whatever you paid, you will get it back, right? If you don't like it, the refund policy is there. Whatever you paid, you'll get it back. What else? Is the app accessible on various gadgets? It is there on iOS, it is there on Android, and it is there on laptop. There is a web link, so it is literally there in every single thing. Yeah? At this time, I'm investing some other small cases, but I really want your small case to be launched as soon as possible. I know a lot of people are telling me the same thing, that Shashank, you handle everything. We don't want to worry about it. You handle all our stock investing. But see, that is a full-time job for me as well. And I'm currently in a 9-to-5 job. I'm working in my own company. So I have to give time to that. But I'm trying to make ends meet. I'm trying to figure out if I can draw out maybe 2-3 hours of my weekends and then help you with stock market investing, right? But yes, it will be launched soon. And there will be a special price only for the 1% club guys, right? Because the outside guys they're not a part of my exclusive community. Yeah. Will we get stock recommendation? No, boss. I'm not supposed to give stock recommendation. So you will not get stock recommendation. But I will be talking about a lot of stocks. I will be talking about different companies that are good, different companies that are bad, and I will be doing portfolio research as well. So there are a lot of guys. Last week, I think we did something called portfolio review, where I picked randomly 3 people. I went through their entire portfolio and I told them what is good and what might be bad. But just my take on whether it's good or bad. I don't give any recommendations on what to buy and what to sell. Yeah. Yes, we do analysis on US companies also. It is not just Indian companies. We track what is happening. In fact, I was very bullish on Nvidia 3 years ago, and as you can see, what has happened now, right? So Nvidia is flying through the roof. Yeah. What else? Ayushi, you can let me know how long we need to do this, right? I think your coupon code is almost expired right now. That is why. Okay.
Yeah, the team has expired. It's taking a couple of minutes. It will be expired soon, like in next 2-3 minutes.
Imran Khan, welcome to the club. Yes, Balakrishna, you have a query. Go ahead. Someone's asking which is your native. My native is Mangalore, man. Mangalore, Kundapura, Mangalore side. Yes, Naveen, welcome to the club. Okay, somebody's asking what is beta. Very interesting. There is 2 things in the market called alpha, beta. Okay, alpha means how much extra return I'm making above Nifty. So remember I told you I made 65% return this last year. That means, and Nifty was 25%. So my alpha was 65 minus 25 was my alpha, right? And if you are asking about beta is the risk. So basically my risk was very high. So if I invest in Nifty, the beta will be 1. But if I invest in my thing, it was maybe 5 or 6, right? Guys, there are too many messages coming, so I'm trying to read as much as I can. Someone's asking Malayalam Ariyamo. No, boss. Nan Kannada. Malayalam Gotilla. Only Kannada Gottu. Okay, so I'm more from a Mangalore side, no? So I talk a lot of Mangalore Kannada, even though I'm in Bangalore, which is quite weird. Okay. What else? What is TTM? Oh, very good question. I think on screener you see TTM, right? So what is TTM? TTM's full form is nothing but trailing 12 months. Last 12 months is called TTM. That is why it's called trailing 12 months. It is nothing but last 12 months. Okay. Any scope of learning trading? I told you we're getting a specialist who is a technical analysis trader. We're doing some interviews to find the best person. So they will be coming very soon. Okay. And for all the people who have joined, don't worry, you will get an email and you will get the next steps for orientation, everything that you will get. So don't worry, relax karo. Why you guys are so stressed? We're here only. I'm not running away anywhere, okay? In the 1% club, will you tell us which stocks to invest? No, I will not tell you which stocks to invest. I do talk about what I invest in. Definitely, I do talk about but I'm very short-term trader, right? I'm not a very long-term trader. But I have spoken to them about my stocks that I love, what I like, what I feel will do well. In fact, I've given them 2-3 multi-bagger stocks. I've given them, I had told them I'd invested in a stock which was at 600 crore market cap, not even 1,000, 600. Today it is trading at 1,200. In the last 4 months, it has doubled, right? Because it was a company that was making more than 100 crore revenue. It was a company that had massive backing by Axis Bank. It is I think it will be one of the biggest companies. It is a very futuristic sector. It is not a sector right now. It might take 20 years for that sector to come. But that company, I had spoken to my team about it. And yeah, it is. We keep talking about different companies. I can't tell you the company right now because you will think it's a recommendation. So I can't do that. But I did a research on that company in my entire community, right? I teach them every week, man. If you just come for one session, it will guarantee you it will blow your mind off, right? And I would suggest the next session is also very important. So please join it. And what I do is I make a lot of PPTs for my session. Like how you saw this PPT, I make a lot of PPTs for my session and I give these PPTs off for free as well for everybody who joins, right? So my stock market guys get everything from me. I don't limit anything and they get me personally for 1 hour every week. Not everyone does that. It is not a pre-recorded course that I am selling and walking away. No, I believe in the power of learning live. I believe in the power of community, and you will literally see it next week when you come to the class for all the people who have joined, how we analyze Nifty, how we understand what is going on in the market, geopolitical tensions, and we look at stocks and companies. So we do every single thing. Okay. Do you teach FNO? No, man, I don't teach FNO, but we're getting someone for FNO. We are getting someone for FNO. I don't do it because I'm focusing on fundamentals because that is my strong suit. Even FNO is what? F&O is me buying the same stocks in futures. Instead of buying equity, I buy futures. I buy Reliance in futures. I buy TCS in futures. That's all. I just take leverage on buying TCS. I take leverage on buying Reliance. There's nothing else. I have enrolled for finance with Sharan tomorrow. Should I cancel my enrollment to this session since I'm not a 1%? I didn't understand that at all, Praveen. If you have paid for 1% club, then there is no Sharan and Shashank that is different. You get everyone. You get learnings from each and every one of us. So if you've already enrolled through finance with Sharan, then you're already a part of this community, right? But if you're talking about you have enrolled in my session and you want to attend Sharan's session on the masterclass, I would suggest definitely attend because his masterclass, the amount of finance knowledge that is there is unbelievable. He's amazing at what he does when it comes to personal finance. He gives me tips on personal finance also, right? So it's crazy. I learn, I am good at stock market, but he tells me what to do about personal finance. So it's just amazing, right? What else? Okay, guys, we'll take last two questions. Yeah, Ayushi, is that okay? Okay.
Yes, Shashank.
What
We can do
else? Can we do investing and trading with a 9 to 5 job? Good question, Balkrishna. Don't do trading. Trading is not something you can do with a 9 to 5 job. Investing is something you can do with a 9 to 5 job. Okay? Because when you invest, when does the market come out with results? They only come out once in 3 months. And that is when you need to track the company, look at some news that comes from the company. So you have time to do it. But do not do trading because you cannot do work and trading. You will get fired from both. Investment is much better because you can stay invested for a long time. You can learn properly. All of that is much better, right? So do it that way. What else, guys? What about positional trading with a 9 to 5 job? Again, you think positional trading is easy? You know what will happen in positional trading? I'll tell you. You invest on Monday, okay? Whole Monday, instead of working, you will be checking your positional trade because what if it goes down by 3%? Tuesday, you will get up and look at the trade. Wednesday, you will get up and look at the trade. Thursday, you will look at the trade. Friday, you will look at it. What is the difference between positional trading and intraday trading? Your mind is going to be there. Your stress is going to be higher. What if the market falls tomorrow by 100 points? You know how much stress you will be in. Why do you want to do that? In fact, you play the longer game. You play the investing game where if the market falls, you should be the most happiest person. Because you're like, boss, I've identified 5 multi-baggers. Every time the market falls, I'm going to invest in those multi-baggers because nothing's changed from the company. But the market sentiment is falling. I don't care. I'm going to buy more. I do that. Every time the market falls, I've been buying Reliance. You think he'll become poor tomorrow? No, nothing's going to happen to him. He's one of the best guys because whoever comes in the future, he's protected and he's playing a very futuristic game. So I'm a guy who loves investing when the market falls down, right? I have more time and experience, so I do a little bit of intraday here and there, but I don't do intraday every day. That is a big myth. I don't do intraday every day. When I have time, when my office is little chill, that's when I do, or when I have good risk appetite. See, my entire portfolio is around 2 crores, right? Now, when I buy, I don't buy more than 10 lakhs or 5 lakhs in each company, which is 1% or something of my entire portfolio. It doesn't even affect me, right? Sometimes 1.5 lakhs I buy. So I don't have to look at it every day because if it goes down, no problem, right? Awesome. Superb. What else? Any website to follow news about the market? I usually prefer Economic Times. I think that is the best right now. And if you have Live Mint, I think these two are one of the best. And I also look at Bloomberg India, but sadly, most of the Bloomberg articles are paid. So I have a hack around it. Do you want to know the hack? Should I tell you the hack? So if you see any paid Bloomberg article, copy the title of that Bloomberg article, copy that title, paste it on Google. And when you paste it on Google, just type Canada. Just type Canada. Same title and type Canada. So what happens, Bloomberg has this Canada website where they have a rule, they have a law with Canada that Bloomberg has to be free for Canada. So all the paid articles that you see are actually free on Canada's website. All you have to do is go to Canada's website and access the same free article. It's insane. It's just stupid sometimes. Yeah, but it's there. Okay. What else? Is there any tool for news on companies you're investing in, Romit? Yeah, I think See, you can use Google Alerts, number one. Number two, you can also use Tijori Finance. That is also a good app. And you can also use Screener. Screener also gives you a good idea of what is happening with the company and all of that. And Screener also gives you access to transcript reports, PowerPoint presentations, all of that. So it's great. Any books you can recommend? Sumit, have you become a part of 1% Club? Yes or no? Sumit Vadke. Okay. So for all the people who are a part of the 1% Club, when you join the WhatsApp group, just ask the mentor, give me Shashank's reading books. I have made a list of some 15 books to read. You can have that access. So this is only for people who are a part of 1% Club. So just ask the mentor, I want the reading books material. They will give you everything. So don't worry about it. Okay? By the way, reading is the most important. Most important. What else? Yeah. What else, guys? What else? What if we have 1 crore? Can you teach us how to diversify this amount? Yeah, we usually do portfolio reviews so that I can help you in diversifying, because see, diversification also comes with a lot of understanding of who you are, what is your risk appetite, what is your liabilities, have you bought a house or not. So all of those things are important, right? So after looking at all of that only I can make a decision. But when we do portfolio review, we can do. But also, Abdul, if you do have 1 crore, you can use the personal CFO option. I don't know what the charges are, but you can definitely go check them out. They will help you with everything. So you don't have to worry about it. Yeah? Okay, at least give us one book for us to read on the stock market. Okay, read this book on. It's a little expensive, but I found it one of the best books to read in the market. It's called It's called Masterclass on Super Investors or something like that. I'm not sure exactly what that name of the book is. Let me just check. Masterclass by super investors or for super investors or something like that. Masterclass with super investors. My bad. This book is very good. I think it's $1,000. I have purchased it on October 2023. As you can see, it is really, really, really good. Okay, because this is, I don't know. I found it one of the best books. It is just reading. It's like stories, but it's stories of big people who have become damn rich, right? So I would definitely want to, I want you guys to check that book out. I think that would be great. Yeah, awesome. Okay, guys, chalo. I think the masterclass is done. First of all, how many of you all enjoyed this entire masterclass? I hope it was slightly different from what you guys would have come with some different notion. But I hope in this time that was there, I gave you a lot of reading and I gave you a lot of understanding about the stock market. I gave you a lot of things. So if you like the session, please do tell your friends or anyone who wants to learn more about stock market. You should definitely recommend them to join my next session. I'm sure they should get some ads somewhere or the other, but you should tell them to join, because I told you I explain in very, very, very simple terms, and this helps a lot of people as well, right? It is just more about you getting help for other people. Okay, so I hope you guys like this episode and I hope you guys love this entire masterclass. I will be seeing you guys soon. Until then, enjoy. You guys have been a great audience. Thank you for your time. Take care. See you guys. Bye bye.